Now we have another problem in which we don't have a single product but a lot of products. Like we have a textile company that produces silk textiles, cotton textiles, and the rate of sales tax is different for different products. And we have sales as well as the purchases for a tax period. So what is the tax period? It is in India, the tax period is from April of a year to the March ending of the next year. So the financial year in India closes on March 31st, just for general knowledge. So what happens is till March 31st, any company or any person has to pay the sales tax on the sales or purchases of that year. So what happens is the question is in the tax period ending March 2016, so a tax period that ends on March 31st of 2016, a textile company purchases silk textiles worth rupees 6 lakh. So silk textiles have been purchased from April 2015 to March 2016 worth rupees 6 lakh, taxable at 12.5%. Cotton textiles worth rupees 7.5 lakh, taxable at 4%, and handloom textiles worth rupees 1,85,000 that are tax exempted. There is no tax on them. So I am just writing down all the details in this table that I've already made, because in this question it's very difficult to keep the tracks on. So the tax rate for silk, first of all, is 12.5%. For cotton, it's 4%. For handloom, it's 0%. It's 0%. So purchase of silk is rupees 6 lakh, of cotton is 7.5 lakh, and of this is 1,85,000, right? So what happens is 1,85,000 of handloom is purchased, 7.5 lakh worth rupees cotton is purchased, and silk worth rupees 6 lakh is purchased. So now what do we have next is input tax. Now what is input tax? There is another term called input tax. Input tax is the total tax calculated on the purchases. So if this is the total purchase, what is the tax paid by the firm to whomsoever the firm purchases the thing from? The total amount of that tax in a particular tax period is called the input tax. Now what is output tax? Output tax is actually the tax collected by the firm on the sale of goods. So output tax is on the sale and input tax is on the purchases. Is that clear? And what is sales turnover? There is another term called sales turnover. It is the total sale that is made by the company. So the output tax is actually calculated on the sales turnover. Now moving on with the questions. These terms are very, very important for you to do to solve this question. So moving on to the question, we have during this period the sales turnover for silk textiles, cotton textiles, and handloom textiles were worth rupees 8.5 lakhs for silk, rupees 6 lakh 87,500 for cotton, and we have 2,10,000 worth rupees handloom sold. So we have sales of rupees 8,50,000 for silk, we have rupees 6,87,500 for cotton, and we have 2,10,000 worth rupees handloom sold in this financial year. So what happens is, next we have a silk textile worth rupees 20,000 was also returned. Now what we do with this, I will tell you later. By the firm during the same period, calculate the tax liability paid by the firm under this tax period, under VAT. This is very important. So under VAT, what happens is we only have to pay the sales tax over the value added. So how much value do we have it add? That is equal to the profit. So how do we calculate the profit? First of all, we have this is the purchase, this is the sale. So we have to calculate the input tax for silk, that is the tax on the purchase of silk that is already paid by the firm. So that is 12.5% of 6 lakh. I've already done the calculations in the rough. You guys have to do the calculations yourself. This value comes out to be equal to rupees 75,000. We have 4% on 75,000. This value, sorry, 7.5 lakh. This value comes out to rupees 30,000. Now handloom is tax exempted. So we have this input tax value equal to rupees 1,05,000. So this is the total input tax. Now what is the output tax? Output tax is calculated on the sales. So we have 12.5% for 8.5 lakhs. This value is equal to 106,250. Again, I've already done the calculations in the rough. You guys have to do the calculations yourself. Now we have the cotton has 4% tax that is paid on rupees 6,75,500. Now this output tax comes out to be equal to rupees 27,500. Handloom is tax exempted. This value is equal to rupees 1,33,750. Now this is the total output tax. This is the total input tax. So we have a formula which says the total tax payable by the firm is equal to output tax minus input tax. Output tax is the tax collected, input tax is the tax that has already been paid. So the difference between these two gives us the total tax payable by the firm. But we have another modification which I told you I'll discuss later. A silk textile worth rupees 20,000 were returned. So what happens is that they have already purchased and they've already paid the tax on that and they return it. So the tax is already paid but they never sell this and they've returned it. So they've paid an extra tax on 20,000 rupees worth of silk. So we calculate the tax paid extra is equal to 20,000 into, we have 12.5% for silk, 12.5 upon 100. So we have this equal to rupees 2,500. So what happens is that rupees 25% of tax is paid extra already. So we also have to subtract this amount from the output tax so that the total payable tax can be calculated. So there is a little modification in the formula which says the total payable tax is equal to output tax minus input tax minus any modification in output tax. So the total payable tax is equal to output tax minus the input tax minus any modification in the output tax. So we have all the values. We have output tax equal to rupees 133,750. We have input tax equal to 105,000. And we have the modification of tax equal to rupees 2,500. Now we get this value equal to rupees 26,250. So a total tax of rupees 26,250 has to be paid by this firm at the end of the financial year of 2016 to the state government.